I'm pretty comfortable saying that was the bottom, right? I thought the bottom was 17.8 on June 15th. I really thought that was the bottom.
Right.
But I said I didn't see FTX being a complete fraud. That wasn't on my bingo card. So, we lost another couple grand to that. That's actually pretty good when you think about it. There were a lot of good charts that said 10 to 12 was really the lower level that we should have hit, and we didn't get there. So GBTC unravels. Tether turns out to be a total fraud. Deltec Bank is running money for some crime syndicate. Then maybe 10 to 12 comes into play. But I don't think anything lower than that. And I'm very comfortable saying the 15 was it, and we're back into spring. I'm not even sure we're gonna head back through the 18 level. I think the best thing to watch is higher lows and higher highs. So as long as we keep making higher lows, I'm comfortable that we're in a bull period. This was definitely a short squeeze, right? The last 3 weeks, total short squeeze. Now we need to see signs of accumulation. If we see signs of accumulation, that'll be really, really good. And my belief is April, May is the beginning of the 9-month run through the halving, which I think we're going to add a zero. I think we're going to 10x the market cap, and we're going back to that 3 trillion level. And I think that's coming. And it doesn't have to come tomorrow, and it doesn't even have to come next month or even by April, May. I think it's Q1, Q2 of next year.
Mark Yusko, founder and chief investment officer of Morgan Creek Capital Management, shared his belief that now is the time to be buying Bitcoin and crypto, as he believes going into 2023 is the birth of a new bull cycle as we exit the crypto winter of 2022. He predicts that in the run-up to the next Bitcoin halving next year, Bitcoin will get to $100,000 and then go on to hit $1 million per coin in due time. Yusko also believes that we have now seen the bottom of markets following the FTX collapse and are now in the crypto spring. A crypto spring is characterized as the price bouncing around, not hitting new lows but also not having any sustainable upwards price action. Make sure to stick around to the end of the video where Yusko breaks down why he believes crypto is inevitable as capital flows from baby boomers to younger generations, and why he believes the 4-year cycle is still completely intact. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
So a couple things. So on the macro side, I don't think we're out of the woods. I don't think we're on the precipice of some calamity. I've said for probably the last year that this recession, and I actually believe we're in the recession. I think they'll call it retrospectively. They'll say it probably started March, April last year, and we're probably closer to the end than we are to the beginning. But it's a shallow recession, very similar in my mind to the 01 recession. 01 didn't even really feel like a recession, other than the fact that things got exacerbated by the lockdowns following 9/11. If you go back to 2001, it was interesting in that we had the tech bubble starting to bust. First quarter GDP was negative. Second quarter GDP was marginally positive. Third quarter was negative, exacerbated by 9/11. And then fourth quarter was positive. The whole year, GDP was actually up 1%. We're still waiting on fourth quarter number. With the fourth quarter number, last year is probably going to be a positive number. But we still had 2 negative quarters, January, February. Third and fourth quarter weren't real. What I mean by that is most of the GDP was simply the resale of the oil from the SPR, which is just a bogus way to create GDP, but is what it is. It's like retail sales numbers. Retail sales numbers do 2 things that are just silly. You think about the future. We got bad demographic trends, right? We got a lot of people from our age cohort, the boomers, that are turning 65 to 85 and starting to retire. And that's negative for productivity. It's negative for working age population growth. GDP equals working age population growth plus GDP. Both of those are sub 1%. So other than, cheating, like by selling oil in the SPR, it's going to be tough to get greater than 2% GDP. So it's going to feel not very good. You throw on top of that the Fed continuing to tighten. Everybody says, they're pivoting. Well, they haven't pivoted yet. They slowed the pacing tightening from 75 to 50. And now people are saying, oh, it's going to be 25 this month. Maybe. We'll see. But even that is still hiking. That's not cutting. And so I think the macro is still a headwind, is that. Now, on crypto, I think we're in the middle of one of the great short squeezes of all time. And it's not just crypto. It's everywhere, right? If you look at this month, right, the first 3 weeks of January, the crappier the company, the more money they lose, the worse the business, the more it's up. Peloton, Zoom, GameStop, AMC, 60, 70, 80% this month. Forget, over any meaningful period of time. And we're talking 3 weeks. Now, the problem is, when you're down 95% and then you rally 80%, you're still down, in the 90s. So it's not really that good. But there's a interesting thing going on this year, Paul, that hasn't happened for a long time. So years ago, there used to be something called the January effect, where people would sell their losers in December for the tax loss. Right. They had to wait 30 days to buy them back. So in January, all the stuff that was horrible the year before did really, really well. And it was known as the January effect. And it was really small cap and micro cap names by and large. And that's where the excess returns for the year came from. Well, they changed the tax laws a number of years ago that made mutual funds sell by October 31st, not December 31st. And so the January effect got shifted to November. So if you look in the middle of November, just about every year, you have this 2-3 week period where the crappiest companies, right, the things that were just horrible all year, did really well. And you didn't get the January effect. Well, this year, last year was so bad. Like everything was down. Stocks were down, bonds were down, small cap, large cap, international, emerging markets, everything was down, crypto. So the regular folks actually did some tax loss selling. So those tax loss sales were of the horrible companies like Peloton and Zoom and AMC. Right. And they now are rallying in a huge short squeeze. And Bitcoin, I think I have this right, Binance just had over a $500 million collapse of shorts on their platform. So we are way oversold. Way overbought. We are as overbought as I've ever seen Bitcoin. So I still believe we're in crypto spring. Crypto winter's over. We got through Hurricane Sam, which I didn't anticipate. And that's where we went. We were at kind of 18,000, and that's what I thought was the bottom. And then we had Hurricane Sam that took us down to 15. And now, when we got back to 18, that to me is spring. Spring is choppy, ugly, not really up and to the right. Up and to the right is summer. Summer's still 3, 4, 5 months off in anticipation of the halving. So could we have a retracement back to 18 before we head? There are a lot of people saying we're going to be new all-time highs this year. Possible, definitely likely in early 24. Here's an interesting stat. Every halving adds a zero, meaning it increases the market cap of the Bitcoin asset by tenfold. So we went from 1 to 10 in the first halving. Then we went from 10 to 100, from 100 to 1,000, went to 10,000 in the last one. And I think, January, February next year, we go to the 100K. And we'll surpass that, because then the next one after that, brace yourselves, right, is 1 million 4 years later in 2028. People say that could never happen. No, it will happen. It's just going to take time. Forgot about earlier was you got the fundamentals on one side, and then you have the monetary piece on the other side. And here's the thing. Bitcoin and gold don't like quantitative tightening. Right, they don't like money supply growth shrinking. So we actually have had, in recent months, the first time in 60 years, money supply actually shrink. So if the Fed follows, see, Japan already pivoted. If the Fed follows, then that'll be good. Because the thing that people forget, one Bitcoin is one Bitcoin. We don't price it in Bitcoin, we price it in dollars. So the reason that Bitcoin goes up over time isn't because Bitcoin gets better, it's just a Bitcoin. It's because the dollar's getting worse. And so when we're quantitative tightening, the dollar got strong, which meant the price of Bitcoin went down. Now, as the dollar's getting weak, and the dollar's been in free fall, right, since October. I mean, absolute free fall. DXY just getting crucified. Yeah. And so if the Fed follows through, then I see a big tailwind for Bitcoin, gold, and all stores of value. I used to say, form your base, Bitcoin, Avalanche, Solana, Ethereum. I might modify that. I might ditch Solana. I think it was a Sam coin or scam coin a little bit. I think I think there's a lot of good development on Solana. I think there's a lot of good projects on Solana, but unfortunately, I think that was one of the manipulated. It's not as bad as Serum or FTT or Oxy or a couple of the others, but so I'd probably take Solana out of there, and I'd probably swap in Polkadot and Cosmos. So that doesn't make a very good mnemonic, but I'd probably pull Solana out of that 6 and keep the other 5. Because the reason I like those 5 is I'm not sure whether right now we have 5 protocols that govern the internet. So there's IP at the bottom, internet protocol, and there's TCP/IP, then there's FTP, SMTP, HTTP, www. I can argue that on top of Web3 is Bitcoin is the base layer, Filecoin is FTP, Ethereum is www, and Cosmos, Polkadot, Avalanche are SMTP, HTTP. I don't know which ones. So we end up with 5 or 6. Or I could make a case, kind of, not as well as the maxis, that it's Bitcoin always, Lightning, L3, L4 that haven't been developed yet, and who knows on top, and that there is no other L1s. Or I could make the case that Bitcoin, Ethereum, Avalanche, Polkadot, Cosmos, and then we have bridges and interconnectivity, interoperability. I'm not smart enough technically, Paul, to tell you which one of those. I think the key to investing in this ecosystem is diversification. Don't put all your eggs in one basket. You want to have a big chunk in Bitcoin, fine. But if you think about it, if Bitcoin is as successful as we all think it will be, it won't be the best performer. Maybe someday there's a developer that does something that Doge and Shiba can do something, but I don't.
Who knows?
I got a debate with a guy I really respect and admire. And he said, no, there's value in memes. But I believe his point, which is it's reflexivity, like Soros said. The fact that people believe it makes it so. And it is true, right? I mean, it's Dogecoin's a $10 billion asset or $11 billion asset. People believe it. Now, the problem is, who would they all sell it to? Well, that is the definition of a Ponzi, right? The only way out is to sell yours to somebody else. Maybe it's not a Ponzi. Maybe it's a multi-level marketing, right? As long as you can convince other people to come in, that's what it is. It's more multi-level marketing than Ponzi.